As we're getting ready to settle in an off-the-plan property, probably 2 to 3 months away, we need to start preparing ourselves. So what I'm going to do is do a small call to action in Spanish around subtitles. Si te gustaría tener subtítulos para mirar este video, en YouTube hay un botón que tiene una CC y ahí puedes elegir el idioma de los subtítulos porque este video va a ser en inglés. So now turning to English, we have purchased a property and they're going to deliver this property sometime in the next 2 to 3 months. And the first thing we need to know is timelines and what's going to happen. So as you're about to receive your property, there's 2 very important steps from the vendor developer side, which is receiving occupancy permits and the individual registrations of title of each specific unit. And usually once they receive both of these, the occupancy permits and the titles, that's when their solicitors will let your solicitors know that settlement can take place, and usually standard within the contract of sale is 14 days. But 14 days is not enough time to prepare for your finance mortgage process, and that's why we need to start preparing ahead of the vendor calling for settlement. Otherwise, if we haven't started that process and we're late, there's gonna be penalties involved for each day that we don't settle. So Mary, thanks for joining us. Can you give a bit of context of who you are and what you do, please?
So my name is Mary. I work at Flexstock as a mortgage broker. We're partnered with Wealthy and we're specialising in brand new purchases. So this is something that we do day in, day out, basically.
You have a lot of experience. Previously in the past, you worked many years for a bank, for ANZ.
Yes, I spent 9 years at ANZ and doing the same thing, basically, home loans and business loans, yeah.
Perfect. So can we start by how do you kick off a finance process?
Sure. So we'd like to meet with you first, have a conversation, find out a little bit about you and your income situation. And as part of that process, we would be putting together an application for what's called a pre-approval or a conditional approval. And what that is we're picking the lender, your plan A lender, with the options that we've got. And the conditional approval is an approval subject to valuation and any other conditions. So basically the bank is saying, hey, Mr. Customer, yes, we're happy to lend you this money based on X, Y, Z. And once we've got that pre-approval, the next step then is to go to valuations.
Perfect. So let's talk about valuations. When should we be doing valuations?
Yes, it's a very fine line. You've got to be not too early and not too late. So typically the vendor or developer will allow valuers to come into the premises, usually when the property is about 95% complete. And the reason for that is it means that, flooring is in, landscaping may be done, it's clean, there's not rubbish everywhere. A lot of the common areas are completed. And that allows the valuer to go in and see the property for its full potential and be able to value it as accurately as possible. If you go in too early, if floors are missing or things aren't completed and there's rubbish everywhere, the valuer might undervalue the property.
And can you get different valuations depending on the lender?
Absolutely. So every lender has a different view, and some of them will look at like for like, some of them will look at broader market conditions. It just depends on the valuer that gets sent out, which is why we say we have a plan A, but we also have a plan B and plan C. And that essentially just means that if we order a valuation with your plan A lender and it doesn't come back ideal because that bank may not have the risk appetite for that location or that property, we'll proceed with plan B, plan C and give you the best possible outcome.
And I'm just gonna chip in one of my personal experiences. Definitely each bank and valuer has a different methodology. I had one property that I was trying to refinance, not settle, and I went in with 4 different banks, and the difference in the valuation was like massive. This was a really affordable property a couple of years ago, and the difference, just so people understand, is the lowest valuation came back at $470,000 and the highest valuation at $580,000, right? And like, wow, it's the same property and it can be a very big variation.
Each lender looks at it completely differently, and then their valuer looks at it differently.
Okay, so essentially you will start working on a plan A and go for a pre-approval, but of course it's pending valuations, and if the valuation doesn't benefit you for whatever reason, you might decide to activate plan B. Sure. So essentially that's the biggest reason why it makes a lot of sense to work with a mortgage broker versus going directly to a bank that they can offer only one single valuation, right?
Correct, yeah. And sometimes because the bank doesn't specifically specialize in brand new property or off the plan property, they don't know that they can't just go and order the valuation when they want to. We've had an experience for a customer where they went direct to bank. The bank ordered the valuation and the floors weren't in the property, and that meant that the property was valued at like $40,000 less than what it was actually worth. Fortunately for that customer, we were able to rectify the solution. They came back and we ordered a valuation 3 weeks later when floors were completed and everything was fine, and they were able to go ahead, just not with their plan A lender.
Makes sense. Yeah. Makes sense. And so we've now kicked off the finance process by booking in a meeting and having that initial conversation. So what are the usual documents that you will need from any person that needs to request a mortgage?
Sure. So typical documents, and I will caveat this by saying that each person is unique and their situation is unique. So we're going to be asking for different things from different people. There's no one size fits all. But generally, we'll be asking for verification of income, so pay slips if you're employed, tax returns and financials if you're self-employed, so if you have a company or a sole trader ABN. We'll be asking for identification documents that includes passports, driver's licenses, visas where applicable, and Medicare cards. And we also ask for bank statements showing proof of savings, showing proof of deposit if you've paid already, and for any existing mortgages, credit cards, personal loans, we like to have statements for everything so that we're completely covered. It's a lot sometimes to provide, 3 months worth of statements to go and download everything can be tedious, but having it allows us to package a solution for you that works for you, basically.
Yeah. And what happens if you start this process too early?
Essentially, they may not have the savings available. They might still be trying to save some money. They may not. The approval may not last for long enough. So typically an approval lasts for about 90 days, which is why we recommend starting at the 2 to 3 months from estimated settlement mark. Any sooner than that, your approval lapses and we can renew it for you, but it just means it's an additional credit check against your name.
Yeah, so you will have to deliver new pay slips, new everything, so you'll do the homework twice, essentially.
Basically, yeah.
Awesome. And let's say that someone is close to settling and they might be traveling overseas. So what are the things they need to be conscious?
Sure. Awesome that you're traveling overseas, which is completely fine. All that we ask is that you have access to your email address and your Australian phone number. And if that means that we can contact you and say, hey, Mr. Customer, please turn your roaming on. The reason we ask this is because the lenders as well as us may text you, call you, email you, and we need you to be able to answer if it's something urgent.
That's a big one because a lot of our clients use WhatsApp.
Yes.
And you do need to be able to receive SMS, text messages.
It also means that you have access to your banking so that if we need you to transfer any money on the day of settlement, you can do so. And it's awesome that you're traveling, but please don't spend the savings for the property on the holiday. Okay. Keep those separate.
That will bring me to the next point. Sorry.
Yes.
I'm going to say one extra thing. In most scenarios from our experience, most of the documents are signed electronically, yes. But depending on which state or territory you're purchasing, there might be a requirement to do a wet signature.
Yes, typically if the purchase is in Canberra, we know that we require one particular document, the mortgage document, to be signed with a pen. So that means that if you are overseas, we also require you to have access to a printer.
Printer and enough time to then sign and send it via post, right?
Yeah, because we need the originals back.
Yeah. And perfect, that's something I didn't want to forget. And also, as you are in the middle of the process, or you might have already received an approval, there's things that you want to avoid until the day that actually you have settled, the title has transferred into your name, and the funds from your mortgage have been released to the vendor, right? So what are those things that you want to avoid?
Sure. So I mentioned don't spend your savings. That's a very big one. Any funds that you have put aside for the property and will continue to save to put away for the property potentially, please don't spend them. Please don't apply for any credit cards, personal loans or car loans during the period of us going through the pre-approval, valuation, unconditional approval and settlement of your loan. Once the loan settles, if you need a credit card, you need a car loan, go ahead. Assuming you can service it, that's completely fine. And I've gone blank now, but they're pretty much the main things. Don't spend the money, don't apply for any credit cards. Just wait till settlement.
And I think it's a really important one. And again, I always try to go back to my own personal experience. Every time that I'm about to either purchase a property or remortgage, I go above and beyond in behaving properly, right? Like showing that out of my bank account, the least minimum money is coming out, like minimum survival. And I do a massive effort. I don't go shopping for clothes. I just try to stay like very well behaved. So just know this is just a temporary.
Yeah, it's like a temporary pause. And we ask you to not do these things because one, you're encouraged to save 20% plus costs usually. That doesn't mean that all of that's going to be used. There are instances where the lenders will lend you, above 80% of the property value. But we encourage it because you never know what could happen. Having access to extra funds on the day just means that you're less stressed and everything is smooth. Not applying for credit cards. Those things, when you apply, it does what's called a credit check. And just because you have an approval with the bank doesn't mean that they're not going to check that you're not doing anything else while they wait to settle.
They detect absolutely everything. Now, you just mentioned having a 20% deposit plus closing cost. That's the recommendation. And then some people might get lending for more than 80% of the value of the property. So what does that imply?
So that basically means that the lender is taking on the risk of giving you a little bit extra than what they normally would. And for the benefit of that, they charge you what's called lender's mortgage insurance. Lender's mortgage insurance protects the bank, not you. And it's purely for the luxury of being able to borrow more than 80%. Every bank charges a different percentage. Usually we say it's about 2%. That varies depending on how much over 80% you are and which lender you choose.
Each percent, I heard you say this, each percent does affect.
Correct. So we see instances where if we're lending the customer 88% plus lender's mortgage insurance, making it 90%, the lender may, charge 1.4 to 2%. And then as soon as we reduce that to 85 or 84%, that could mean a couple of $100 saved. In some instances, a few $1,000s saved. So it's a big difference. Every percent counts.
Yeah. And in the scenario where you have specific professions, like I've heard sometimes lawyers or doctors might have LMI waivers, but that's usually very specific to a certain bank or lender, right?
Correct. So if you're a practicing lawyer, so you are working as a lawyer, a practicing accountant, or a doctor, there are different types of doctors, so there's a whole list that we can go through. Some lenders will allow you the benefit of borrowing up to 90 or 95% in some instances, with no lender's mortgage insurance. Typically, they don't go to 95% on investments. They will only go to 90, including lender's mortgage insurance or no lender's mortgage insurance if you're in one of those professions. I will say what that means, though, is that, yes, we're going to 90%, but there's 2% of that loan that is going to the bank for lender's mortgage insurance, which means you are 2% short on funds to complete. You need to make sure you have that. So technically it's 12% plus costs.
And everyone's different. Some people will want to prioritize using the least amount of cash, but other people will want to prioritize the best possible cash flow month on month. And of course, if you put less cash, you're obtaining a bigger loan, which means that your monthly repayments go up and your cash flow doesn't look as good, right? So just be mindful that nothing's perfect, and you do want to make sure that you're working on the numbers and understanding what it means to get a higher percentage of lending. Perfect. And the one thing, just to bring an awareness and to wrap up this video, is that usually very common, and I've been in this situation where I wanna know my exact numbers, right? But usually the final exact numbers only come a couple of days before settlement. And the reason for that is, of course, we know the mortgage and how much money will be lent to us, but the vendor's solicitors need to share with your solicitors all of the disbursements fees. So for instance, if the vendor would have paid water and council rates for the whole quarter, like 3 months worth of water and council rates, then usually what happens is this charge gets split evenly according to the percentage of days that the vendor will be the owner of the property and the percentage of days that you, the new purchaser, will be the owner of the property. And all of those disbursements usually just come a couple of days before, which means that usually your solicitors will provide you with their estimated amount, and the recommendation from both the mortgage broker and your solicitors is that you don't have exact to the dollar or the cent, that you will have maybe a couple of thousand, like $2,000 extra, just in case, because what you want to make sure is that on settlement day, settlement goes through and you don't stop it just because you were missing a couple of dollars.
Yeah, it's really important, especially because we know some of you may keep your savings overseas. The last thing we want to be doing is trying to contact you on the day of settlement and having you try to transfer money from overseas.
No. And that's a good point. You just brought something else. Usually, a lot of our clients ask me, when can I bring the money? Like whether they have to sell shares or bring money from abroad. And they try and wait to the very best possible time on the very last minute. And usually, that's a horrible idea because the banks need to see proof of funds to complete. So if you're 3 months away and you haven't kicked off your finance process, probably this is the best time to start bringing the money in.
Yeah, I mean, we're okay with you leaving it in maybe a month and a half before settlement.
Not too much.
But don't leave it too close because there's delays with transfers, money could be stopped partway, you may not be able to transfer, all in one go. You might have to do in splits depending on how much it is. So it's very important that.
And my personal experience is with those clients, always something happens, like you had it in stocks and the stocks went down. You had it overseas and now the exchange is not in your favor. So don't wait till the very last minute. That's my experience. And that's essentially a lot of what we wanted to cover today. This is not the only video that we're creating for settlement. There's a lot of other things to cover. They're not as important as getting the finance ready. Finance is the biggest hurdle that you want to kick off. But in a next stage, we're going to be sharing with you how to prepare. So you're doing pre-settlement inspections, property management, whatever it is that you need to organize, we're going to be guiding you. But for the time being, finance is the #1 priority. Thank you, Mary, so much.
No worries. Thanks for having me.